Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets. Hello, and welcome to Bodies and Wicks. If you don't know what that means, it means a candle. I think I've said that quite a few times. If you've never seen my videos before, my name is Ted, and what I like to do is I like to give my analysis on the markets, financial markets, metals markets, indices, crypto, show you my strategies, anything and everything that I can come up with. I basically just use this as kind of like a journal, and I share it, and I hope that whoever watches this gets something out of it. So if you do like it, go ahead and hit the subscribe button. It's somewhere down there. I don't know, people point to it all the time, but there is a subscribe button that you can hit, and it'll give you notifications when I post new videos, things like that. And it'll let you know what those videos are, in case it's something that you like and something that you don't like. Maybe if you like, hit the like button. If you want to share this with your financial friends, and you see something in here that maybe I caught that you didn't, or if there's something that you caught that I didn't that you want to tell me, go ahead and let me know. Share it in the comments. Hit me up on TradingView. Hit me up on the Telegram. You can find me at Tedzily. That's TEDZILY. You can find me on Telegram and TradingView with both of those names. So what I'm going to do is I'm going to run through USD pairs for this week as quickly as possible. And that is all of them. I'm going to take a look at all of them with a fresh look and see what we can't come up with. Let me see here before I pull up the charts, see which one I want to look at first. And the one I do want to look at first is one that I have been trading, and that is going to be EURUSD. Alright, so right now we're taking a weekly look at EURUSD. Let me pull up the RSI just a little bit more, make sure you guys can see that. Yep, okay. And so, in the weekly chart of the EURUSD, as you can see, we have been following this downtrend that has been happening since 2008. And it looks like most recently, if I want to get rid of this Fibonacci right here, we have and we've been doing this for the past, 3 weeks, to where it, broke above. Especially when the dollar was going through that very, very steep decline. We kind of really get into a little bit closer. I like to get in on the 4 hour on these. Here's where that dollar was going through that steep decline. We kind of had this big bullish flag that was kind of happening. From here, all the way down to here. It just looked like one big bull flag, and that was eventually, gonna take off eventually, and it did. And so when it did, I think I have some support lines drawn, some resistance lines drawn to where it came up, tested those, retested them. Tested another one, came back, retested it, came up, and then we just kind of took off from there. And now we've been kind of hanging out in this area since late July up in here. So this is probably where we need to zoom in on and find out what is going on next. So this big red line that you see drawn, that is that multi-year trend line that started back in I think it was 2008 is what I said, something like that. And these are just some drawings that I had, you know, prior to, you know, if they were going to come down to this area. These are basically the demand zones. Once you get down to the demand zones, of course, these were areas to where you probably pull the trigger and buy. And now, especially if we look left, we are getting kind of almost into this hello. Sometimes the MacBook without a scroller doesn't like to work with me very well, so I'm just going to go ahead and throw a there we go, throw a little line over here to the high and see where we're at in comparison. So there, it looks like a resistance point just above that right here, and it looks like if we can get above that, we are kind of off to the races. But we have been struggling in this big zone right here for quite some time. You know, this right here, all of that, it's just seems to be almost going nowhere. It seems to be either a false breakout or a breakout. We keep coming down and retesting the trend line, and you know, sorry for so much movement, but you know, I kind of want to try to get in focus as much as possible as to what we're looking at here. So during the week, throughout last week, starting right around this area, we had a lot of sideways movement, right? We kept, you know, coming up, coming down, and I kept testing theories, you know, to where right before market opened, it would be going one way, and then, you know, I guess the banks would be pushing it one way. That way, when the market would open, it would completely go the opposite direction. That way, they would get the most out of their position. So, you know, the institutions, if you don't know anything about, you know, the hugest players in Forex, it is the largest banks, you know, the Dutch Bank, you know, Chase Bank, those kind of people. They're the ones that really control the markets, and they buy to sell and they sell to buy. So you kind of have to play their game and learn how their game is played. So I try to look at this from both a smart money perspective and a retail perspective, because they will let retail traders win. But you have to kind of look out, you know, for their clues that they're going to give you as to when, you know, you want to trade. So I did make some actually good calls on some Euro USDs. And one of them had to do with, I want to say it was this call right here. It was this call right here. So a smart money trader, what you're going to look for is you're going to look for the last, you know, candle in either bearish move before a bullish move, or a bullish move before a bearish move. And that is basically going to be your institutions trying to push, you know, the market in one direction. That way they can get a better position to go back the other way, and they'll hold that position, right, until they can get back down to it and let it go. So what I'm saying here is that, and this was the area that I picked this particular candle right here. Let me try to see if I can't get a little bit closer in on it so you can see what I'm talking about. This candle right here was the candle that I saw that was definitely one of those candles. And I believe, I think I took a look at a 3-hour chart or something like that, it was almost like a Maribozu, right? So yeah, this right here you can definitely see, or actually no, it was the 1-hour chart, I want to say. Let me make sure I'm getting my, crossing my D's and, you know, and dotting my I's. Let me make sure I'm in the right area as well. So yeah, it was, yeah, definitely in this area. Let's go back to the 4-hour chart, because that's definitely where I pulled the trigger. Sorry for moving around so much. I know I should probably have this a little bit more prepared, but this is how I do it. So smart money trader, what they're going to say is that this is definitely a institutional candle, or not really institutional candle, but this was a candle that was influenced by the markets, right? What you usually want to do if you're going to be trading this, they'll usually put their their trade, their sell right in at the very top of this, and it's gonna massively move that price movement down, right? And it's gonna convince a lot of other traders to also sell. And once it gets down to the sell, then that's when the institutions start placing, the little lot sizes until it gets back up to where they want to take off with it, right? So they were once this took off, right? So they made a lot of money on this sell, right? But they were still holding a position in this candle right here. So it was this right here that I saw that was, coming down. I think it was early in the morning. And what I did is I drew a line at the 50% mark of that candle, because generally that's where you'll find that it could, at minimum, comes down to. If it usually at the top, but most likely it usually comes to about halfway to that candle before you'll see it start reversing the other direction. So I'm going to throw a vertical, horizontal line right here at the 50, right? So that's what I did, and I woke up, I think it was this morning on the August 26th, and then I thought, it could just retest this, but then, this started moving very, very quickly that morning, this candle did, and I was like, what, I think it could possibly be this candle that's going to be the smart money candle. So I actually put my buy in at exactly at that 50%. It hit that, and then next thing I know, within, I want to say, an hour or so, let me go to the hour, because I want to put a vertical line here, because that last hour of that vertical line, hopefully that's what it does, you can see it just kind of darts down. Yeah, this right here. So this is the last hour, right, of this candle that I saw that was moving very, very rapidly down. And so that's why I put the buy area there, and it, not at like a support level or anything like that. I put it just a little bit further down. And I didn't expect it to get all the way down here, just because generally that would be your stop loss. So I caught that buy, and whenever I caught that buy, next thing you know, it is up, and I want to say I got about a good 30-35 pips out of it before I jumped out of the trade. Because I'm a scalper, I'm pretty much a scalper. I don't like to hold trades very long. It makes me nervous. That did not go the way I wanted it to, but I did want to measure from where I entered here until about, it was probably somewhere around in here is where I decided to jump out, because it was that first hour, right? I took an hour for it to go up, and then after that hour, I was like, you know what, 35 pips is good for me today. I am good to go. And then over here, this was the Jackson Hole Symposium. This was an interesting trade, to be honest, because I want to get into the 15 minutes of this. Because this is where I started trading my new strategy. And my new strategy is, I'd have to get into the 5 minutes of this. Once the August 27th, once the, here it is over here. So my new strategy is, once I have two RSIs, right? One is 16 and the other is 29. Once the 16 is at or below being oversold at the 30 mark, I take it into comparison with the 29 RSI to see if there's about an 8 to 10 point difference. If there is, that's where I like to place the buy, because since the dollar was doing so poorly, I wanted to go against the dollar, so I would rather buy the euro. So I purchased the euro at this point somewhere around in here, because that strategy was coming into play. Now I had to wait a little bit, and then Jackson Symposium happened, and next thing I know, it shot up, and I actually had a take profit level already set, because there was already a high right here. So I had I had my take profit level set right there, right? So that was where my take profit level was, and I started the trade. Where did I say I started it? It was right before the Jackson Symposium. So it was right around here because that's where I started using this new strategy, right? This is one of the first ones I started this new strategy with. Actually, it was NZD, but I'll get to that one next. This is the second one. So I took that and took that all the way up. And yeah, let me see here. Yeah, so that was a good about 87 pips, I want to say. So can't complain on that one. Can't complain at all. And a funny thing was is that I actually had a sell limit set right here too. I didn't realize it because I had set it a long time ago whenever this high was made. So I was like, well, there'll probably be a sell there. And at the same exact time this came up, it hit my take profit. It also triggered a sell. That sell went immediately back down. I didn't realize it until I noticed it, and I tried to get out of it as soon as possible because I thought it was going to bounce back up. So I ended up making it about another 30 pips going on the way back down. So those were a couple of good trades that I had gotten from EURUSD. At this point, I was looking at you know, the dollar and see what was going to happen after the Jackson Symposium. The thing was is that with my strategy, there was not a whole lot of sudden moves. It just seemed to just started gradually going up, and I didn't get in a good position to ride that up. But now that we have seen that you know, that the dollar has you know, gotten less strength since the Jackson Hole Symposium, we may see more bullish movements coming out of the EURUSD. Right, so first we got to get to these levels here that I had already marked. These are going to be your major resistance levels here. Again, I'm on a 5-minute chart. We can back out of that to about a 4-hour chart to see what we're going to be looking at as far as that is concerned. Sorry guys, I know I'm moving around here a lot. Bear with me. This is just how I do. This is how I do my charts, and I'm bringing you guys along with me, right? So again, we are now above this what was a resistance level. It's probably now turned support. So I wouldn't be surprised if we try to come down here and test this level before moving onwards, depending on the dollar strength. Now, as of right now, you can see over here we're at 92.29, and it looks like it's ticking, you know, downward, which means you could see a signal in the EURUSD climbing higher. I would also look for probably some other smart money move plays as well. You know, maybe it could come down here, and maybe it's going to tag, you know, this. Well, this candle is the Jackson Symposium candle. I would not necessarily consider this maybe a smart money candle. Definitely institutions were in play here. They just ran the money rampant. But you could see it just come to this candle here, and you know, they could have tried to sell to try to force people to try to sell as well. It didn't work. Everybody bought, and now they may try to push this back down to this level here, which is the 1.182 area. So I wouldn't be surprised if we, damn it, Ethereum, looks like Ethereum is losing strength. I'll take a look at that later. But I wouldn't be surprised if we do, you know, have a pullback maybe to this 1.182 area, crossing that 50 MA. Maybe the 200 will probably be, the 200 MA will maybe coming up around that point. Could see it go sideways, pull back, and then move forward. Or we could just see it retest this 1.1883 area, and then move forward. I'm expecting probably more bullish movements on the Euro USD. Also, if we look at this as a whole, if we look at this whole sideways motion here, a Wyckoff smart money trader would tell you that this is definitely almost like a textbook Wyckoff smart money accumulation phase. So this right here would be considered let me do a call out here. This would be what would be called your BC, your buyer's climax, right? So your buyer's climax is here. You have to draw your supports and resistance here. So let's just go ahead and take this and move this down here, right? So that is definitely your support. So since that is your support, we're going to do another call out here. And this is going to be your PSY, your psychological level of support, or your first point of support. And then this down here, right, once it comes down and it tests this point of support, then you're going to have what is called an AR, or an automatic reaction. And that automatic reaction pulled it back up to this buyer's climax area, right? So let's just go ahead and throw a another resistance area here. Now here would be what you would call your up thrust, right? That is your up thrust, because it did not only test the support area, the resistance area, but it also got a little bit above it. It came back down. There is another line of support here, and it's just a little bit above the other support. So with smart money and Wyckoff diagrams, you'll see, kind of two levels of support generally. And so this is another test, right? So that's what you would call these. Would definitely call this a test, because you're testing these. Right now, this is one area that did interest me right here, was this candle right here. This is what we like to call the FU candle, right? The FU candle is the candle that is definitely what they call an operator. What that means is that the institutions had somehow had people buying and buying, thinking that it was going to continue going upwards, and then all of a sudden the institutions decided to sell, right? So they decided to sell. So all these people that had put in all their sells basically took all those people out, probably took out their stop losses and took all of their money, right? So this is definitely an operator candle, and that came into play just because it just kind of came out of nowhere, right? It didn't really make sense, other than the fact that it may have tried to test this trend line that was coming right through the middle of it. That after that, so this, if you want to break these up into phases, you can. So this would actually be, let me see here, if I'm not mistaken, this would be your first phase, right? This would be your second phase, or phase B, once you get the up thrust and your tests, and also operator candle. Now, this is what is called your up thrust after distribution. This is actually a very important part of not up thrust after distribution. Now that's what this whole area is right here. So if I want to draw a little rectangle, because it broke that support resistance. I'm sorry, it broke that resistance after distribution, showing a sign of strength. Came back down. It did not test the support levels again. Instead, what it did is it decided to make what we call springs, right? So if we can just take this and make this one. So there was spring number 1, and then we have in phase C, once you recognize that you're in phase C, which I should probably bring this over just a little bit because it's generally just after the up thrust, right? Once you're in phase C, this actually could be a secondary test right here, which was that last currently the new support. That would call this a secondary test. Secondary test because it got near the resistance level, but now it came down and now it's making what we call these springs. So you have this spring, you have this spring, and then it's making just these multiple string levels. Now these multiple spring levels are the indicators that you need to be in buy mode right now, because this is where the distribution is going to start taking place, or the accumulation, and then it's going to be starting to distribute, right, after the accumulation. So the accumulation phase is almost over, and since the accumulation phase is almost over, we are going to be looking for next what is called a jump across the creek. So I would expect something to happen that would be like this, right? If not, in one swift move, it may take a minute. It could do something like this. And then move forward. But with the dollar losing strength right now, you should be looking for areas of buying opportunities in the Euro USD, and that's what I have been doing. That's where I made some of my good moves that happened down here. Unfortunately, I didn't hold them. But now I'll definitely, especially now that I've taken a look at this from a Wyckoff smart money perspective, this seems to be almost like a textbook Wyckoff accumulation phase, and we are now in the phase D, probably closing into phase E, which is definitely where you need to be making your trades. Your trade should be in the phase D or phase C area. Depending on which direction it is going. To me, it is looking it is going upwards, so you should be looking for buys. Now, that's what I got for Euro USD. I know that was a lot to take in, but this is the one I've been following the most. Second, I will go through is the NZDUSD. So I want to take, well, here, I'm not even going to go to that because I actually think I have it. Well, you know what? Let's do GBPUSD. So let's go with the weekly on the GBPUSD. Again, another one that has been following these multi-year trend lines, right? But the thing with, I think this one goes back all the way to 2007, to where it keeps moving down. The thing is that we haven't broken out of this one yet, like we have with the Euro USD. However, there is a smaller trend line that we did break out of, right? And as you can see, there is a very, very broad supply zone right through here to where we're at right now. So if we drive in a little bit further into the 4 hour, sorry for all the lines all over the place, I do like to mark a lot of support and resistance areas. And you know, I couldn't say the same thing about the Wyckoff method here. It probably looks like something that is similar. The only thing is that we did have two what we would call upthrust after distributions, but these came in the supply area, right? So since these came in the supply area, they rejected it automatically, and then once we finally started seeing, again toward the end of the week after the Jackson Hole Symposium, we started seeing, you know, the loosening of the dollar, which meant that the pound was gaining strength. Now the thing is that the pound has gained probably the most strength, especially over the euro, and it has gotten out of this supply zone. So this tells me that we're probably going to see probably some exponential growth coming out of the pound versus the dollar. If you're a position trader and you weren't getting in, you know, these positions back here, I would say, you know, try to see if there's going to be some kind of pullback, because I'm not for sure where the next good area that we're going to be able to find that is a resistance zone. I mean, I think the next one is probably way up here to the 1.35196 area, somewhere around there. We have a lot of room to go between where we are now and that next area, because the last previous one was just one huge spike, right? So there is a lot of room that we have to play with between here and the next area. So who knows what could happen between now and then. I would expect at least, you know, some kind of pullback to retest. You know, of course that's always my go-to. Some kind of pullback retest, some kind of zone retest, some kind of resistance support level before moving forward. But with a dollar losing strength, who knows? This thing could just continue moving upwards. And I'm looking at the daily chart here. As you can see, it was just kind of all over the place. But again, what I'm going to be doing is I'm going to be looking at my personal strategy, and I'm going to go ahead and set an alarm here. Since I'm looking for buys, I am going to wait until I get an oversold GBPUSD that's going to cross this 50, that's going to cross this 200. I'm hoping that happens somewhere around in this area, to be honest, because I hope it happens somewhere that's going to be along with, you know, very, very well. That's going to be, yeah, you know, it's going to cross that that 200 mark on that 50 or that 200. But you know, if we do get that big large movement, and the difference between the two RSIs is about 10, that could act as a slingshot to propel that even forward. So I'm not going to be putting any buys in just yet for GBPUSD. What I will do is I will take a look at other MAs to see where they are at, and it seems like most of the MAs 250 are below this level. So I would expect with a 2 hour, even with a 1 hour, MAs again well below this level. So I wouldn't get too excited about, you know, about buying right here. I would wait for a pullback, and I wouldn't even sell. You know, I wouldn't even sell hoping for a pullback, because who knows what's going to happen with this. But if I'm betting on the GBPUSD, I would be waiting for a pullback to the 1.32598 area before I would pull a trigger on the buy. And again, that's right along the top of you know, these highs as well. So and again, once you got that, your next target is going to be this 1.35155 area, and that is going to be a large amount of pips. So let's see if we can't see. Yeah, that's going to be somewhere around 251 pips. So if I can get that pullback, I'm going to hold, and I am going to be targeting this area here. Right, so and who knows, that could probably take a couple of weeks, who knows. But as far as GBPUSD is concerned, that is what I'm going to be looking for. And again, I'm going to set an alert on the 1 hour to see if it gets oversold on the 16. Hopefully there'll be a difference of at least about 8 or more, something like it was here. And then that way I can hold it. Even if it does have a little bit of drawback, as you can tell, divergence is your friend, and divergence will continue to push that upwards. That's what I have for the pound versus the dollar. Now let's check out the Kiwi. Kiwi, same thing. We are looking at these weekly. We're looking at this multi-year trend. This one going back to 2014. I don't think it was going back any further than that. Nope. So Kiwi going down to this multi-year trend. It looks to be as if it is a breakout at this point. As you can see, last week, and I think most of this happened toward the end of the week, to where the Kiwi just kind of took off. It retested this. Let me get rid of this actually, so we can kind of get a little bit better idea. Kind of fought this trend line for a little bit, got above it, came back down, retested it, and as soon as it retested it, it just decided to take off. So if we get down here to the 4 hour Nick grid of it, you can see that take off. And again, it tested that line, and it just kind of hung around for a very, very long time. But after a while, again, toward the end of the week, Jackson Hole Symposium definitely had something to do with that, and it made the Kiwi just take off and go along. So, again, looking for buys, and now that we are definitely, above around this area, let's throw a different fib on here and see what we're going to have from this low to this high, and see what kind of pullback we could get. I would think probably here to the 382, just because it sits right on top of that previous resistance. Turned support, and again it struggled here at that previous resistance turned support. So what I would expect is something like this, come down here, maybe struggle, and then come back down again, to this support line, and then after that I would think it is going to take off. It could take a while for that to happen. It could take a couple days, maybe even the whole week. But and who knows? Like I said, with the dollar, it could just take off completely right above that. Let's see what kind of level that we're looking at. Prior to this, we are at about that level right now. So this resistance level could give us some trouble. You've seen this right here. Let's go with that, and for some reason I cannot get a horizontal line to go for the life of me. Maybe it did, maybe it threw it way down here. It did, because I am on extreme magnet mode, which I didn't realize I was on. So instead of just changing it, I'm just going to drag this all the way up, just to give you guys some makes you guys suffer. So I would expect this area probably to give it some pushback, and give us some trouble as far as the resistance is concerned. I would love to see it pull back all the way down to this 382 area right here, this 0.66478 area, 0.6645, and then continue on. That's what I think I would like to see. Again, I will be using my 5-minute strategy to see if we can't get a large pullback here and see. And I don't know if it's going to work with this one, especially around this area, because if we get something that is oversold, right, because it looks like this was oversold. It looks like the difference was 9, right? And I don't think you would have got a whole, well, this could be just the beginning of it. That's what I've learned whenever I was doing this with Ripple. You know, I just kind of held on to it, and then it eventually took to fruition and took off. So right now, hey, 21 pips, you know, I'll take that. Why not? That could definitely be a decent trade to jump in. So, you know, again, I'll be looking for that for those quick pullbacks. However, with this 5-minute, I'm seeing the 200. For some reason, I don't know why all these, I swear I put a moving average of a 50 in all of these, and somehow they just disappear. So again, I'm going to throw a moving average of 50 in here and see where that lands. So it looks like it did cross the moving average of the 50. I usually like to see it cross both the 50 and the 200, or at least get close to the 200. That way the 200 acts as a resistance, and then bounces off of that. And then what I'll do is I'll go to the 4-hour, and then I'll see where the 50 and the 200 are for there. So again, way down below. So that could be on our side to push that upwards, but since it is so far down below, that's why I think we'll probably see a pullback instead. So I don't think I'm going to be buying up in this area. Again, I'll probably have to wait and see how the dollar plays out, but that's what I'm looking at as far as the NZDUSD. 2 key levels I'm looking at: 66478. Right, as the support right now, resistance 67541. 2 key levels to look at for the NZD. Right, now we just did GBPUSD. Next one coming up is going to be the UCAD. So interesting that what we've seen on UCAD is we've seen just the demise of the dollar and UCAD. Now, with this multi-year trend line here that I have going back to all the way to 2012, we have already crossed that threshold going down. We have not broken this trend line whatsoever. So I think we're still going to see some bearish moves. And if you look at the history of this, I mean, to be honest, we have a lot of room to play with down here. I know there are some people that are calling, you know, that are saying, you know, it's got to give soon. It's got to give soon. We got to see a reversal on UCAD. You know, it's got to take off. It's got to go the other way. I am not so optimistic about that. If we take a look at this 4-hour chart, you know, this is where this multi-year trend line came in, this orange line here. You can see it acted as, you know, once it broke through, it acted as that resistance for quite some time, and then it just continued its bearish moves. Now there is you know, this is the next support line I have drawn here at the 1.2943 area. So that's where I'm expecting it to go. After it, you know, it looks like it's already retested this this resistance here, which is 131308. Looks like it's already retested that. Again, it's going to depend on how the dollar is going to play out, because the dollar has just been wonky. You know, it's been moving sideways. We saw some strength of it toward the end of the week, but then again, it just kind of fell again. So again, if you're looking at UCAD, those are the two areas I'm going to be looking at to see if it's going to play off that 1.31308. If it breaks above that, gets a close above the 4-hour, I would expect some kind of bullish movement. But again, I would also expect it to cross this 50 first. Once it crosses this, it crosses the 50. I think we're in for some momentum. But I think for it to really gain some momentum, it's going to have to cross this trend line, the 50, and I think it's going to have to get above this multi-year trend line. So with that being said, I probably wouldn't expect any kind of really bullish behavior until we can get across here. Right, so that's going to be that 1.327, 1.32673. I think that is going to be a key area. If we can get above that, then I would expect there to be a lot more bullish potential. But you know, it would kind of look something like this if we're going to draw this out. Well, that didn't really work out, but you know, you get the BXW down here, up here, take it up to here, right? And meanwhile, this 200 is probably coming into play. Probably gonna come back down here, have to test this, and it's probably gonna have to retest this one more time, maybe give one more slight little pullback, and then move forward if we're gonna see. But that's gonna depend on the dollar, and if the dollar continues to move sideways, this is something that we could see. The dollar decides to actually give us some strength, we might see it do that quicker. But otherwise, if the dollar doesn't do that, what I'm thinking is probably going to happen is it's probably going to do one of these, test off this, bounce up, and then break down below that, and maybe even lower, who knows. But those are the key levels I have. Again, 1.29430 is your support right now, as it is at the resistance of that 1.3133. But to get some bullish action, you would want to see it get above this 1.32673. All right, moving on. This is your USD JPY. So this has been an interesting one, to say the least. We kind of have a giant wedge forming as far as your multi-year trend lines, or at least, well, I guess I have them going like that. But if you're counting from here to here, from here to here, it depends on how you draw this out. But from this trend line to this trend line, you still have some room above. I'm really not honestly sure what I'm going to expect out of the USD yen, because I think the yen is actually going to be a lot stronger than the dollar. Even if the dollar does pick up some strength, I think the yen is probably going to if I'm not mistaken, I think the yen is projected to be a lot stronger. So I would probably expect a good pullback, definitely a good pullback. And one of the things I had noticed is I do have something drawn down in here, and this was from almost a month ago that I noticed this. There was a huge imbalance, right? And it looks like it was slowly filling that, and I noticed this imbalance after it took off, and it made this move here. Made this move up. There's some imbalances right through here. Now I have a line drawn right here at 104.751, and the reason I have that is because there is a specific candle that I have found that if it drops down to that level, I am expecting a buy. Now I'm not for sure how far that's going to go. It could just go to the most recent high, but I do expect that to be a smart money play. I think there are some institutions holding that. And the reason, because let's go to the 45-minute chart, because that's where I found this candle. So if we go to the 45-minute chart, we go back to this area of this imbalance zone, and I pull it up. I'm going to zoom in on this candle because it's an interesting candle. I still have it circled. This is a solid bear candle. Solid Maribozu. There is no wicks on it whatsoever. So somehow in this 45 minutes, there's no wicks. It went from just straight volume from sell all the way down to buy. Whenever you see that, that's usually institutions that play. Wicks are usually, your retail traders. So I see this, and when I see this, and it happens right here too. This, the top of this one is also a Maribozu. This is an engulfing Maribozu. So whenever I see this, I see smart money. I see institutions that play, and look, it's even down here too. There's smart money in this area right here. And the strange thing is that we did pull up and get out of this area for a while. We played sideways along with the dollar kind of doing whatever it did, and now we're starting to slowly come back down toward this area. All right, kind of went around, and there it is. So, USD JPY has just been sideways for a while, and now it's getting to the point where it could drop and hit that point that I am looking for. And I already have a buy limit set for this, for this candle, because I think if it hits that candle, we're going to see it take off the other way. Again, I don't know for how far. I just think that there are institutions still holding that position, that they haven't gotten rid of it yet. If they have, it was because they got close to here and they took a loss and they're just ready to go the opposite way. But I'm not for sure that's going to happen. I do think the dollar is probably going to sell a little bit more before it buys. We're probably going to see, probably catch a decent scalp on that, and then probably more direction going downwards as far as the dollar versus the yen is concerned, because I think the yen is gaining some strength, and especially against the dollar, who has been losing strength. Even though it's been going sideways, that's just kind of what I'm seeing. I don't really have a good idea as to where this is going to play out, just because it has been all over the place. I would just say look at your typical support and resistance lines here. There's your major resistance there. Down here is your support, but again, that's even lower than what I have is going into this for a buy. And this is what I have, and if you want to take a look at this and let me know what you think. But I have the entry price set at 1.475, or sorry, 104.751 as the entry. Profit level I have as 106.387. And that's because that was just the most recent high. I may even go higher than that. Now I have the stop level is just below that 45-minute bear candle at 1.04.507. So that is about 15 pips. 25 pips that you have to play with. If you lose 25 pips, you lose 25 pips. That's really not that much. That's what I like about smart money, is you find these areas to where the market is kind of manipulating. They leave their clues behind, and that is a clue I think they left behind. I think they're still holding a position. They're going to try to get rid of it, and to get rid of that position, they have to get into that position to let go of that position, and then they'll buy. That way they can make money off of that position. That way they're no longer holding it in drawdown. Now, what I would think that we could see is that this could be the new high, right? So this could be what you're shooting for. As far as your take profit area, would be that 1.07 level, 1.0704 level, something like that. And if you have a 25 pip stop loss, that is about a ratio of 9, right? So a 9-to-1 ratio is a very, very good ratio, especially if you're only losing 25 pips. So that's what I have going on for USD JPY on mine. And I think the last one, we have a couple, two more to go through. I'm not going to get too much into these, but we do have the dollar franc. Dollar franc just kind of looks like the dollar. It is just breaking lower and lower, and the question is how much lower can it go? It has broken below this support. Again, these are the two levels I would look at that I have drawn out here. The 9.0829, which is now the resistance. If it breaks above that, I would look at the next level, which is the 0.91876. That is going to be your next level. The next level after that is going to be your 9.356. So if you can get 4-hour closes, or even daily closes above those levels, you could see a turnaround, in the dollar. But there's just a big drop. You could look at these levels here. Here, I'm going to draw some horizontal rays from here, right here, and here. These are the last support lines that you could be looking to go down to, and it looks like it's already hit that support. So it's in between the support and resistance. And now, right now, I'm looking at a weekly chart, right? So, these are kind of heavy support resistance levels, dating all the way back to 2014. Right? But if we want to take a closer look at to see what is happening, let's take a look at the 4-hour, right? And as you can see, this kind of looks like, the dollar index. So if we want to throw that in there just to compare it to it, and I kind of want to do that, let's throw the dollar index in there. It looks exactly like the dollar index. So if you're gonna, and this is one thing I don't like about the comparison, is it doesn't let you kind of scale it or anything like that. But the dollar index and the dollar franc are pretty much the exact same thing. So if you have a good idea on what the dollar is going to do, you have a pretty good idea of what the dollar franc is going to do, because they're pretty much one and the same, which is, to me, quite baffling and quite interesting, because there's no other, there's no other pair that's like that. The only other one that could be like that would, actually there's not. There's really no other one that is like that. So even the UCAD, I don't even think is like that. Let me take a look at UCAD again, and let me get rid of some of these on here. I'm still in draw mode. Sorry if I have a very monotone voice. Usually I'm a bit more livelier than this. I can be a little bit of a comedian, something I really can't, but I can, if you want me to be, I can. They're really horrible dad jokes all the time. I got really horrible other jokes that you don't want me to say. But here, let's take a look at this. Let's throw the DXY on top of this to see what it looks like. So it kind of resembles it. Yeah, it's close. It's not to the T that the USD franc is, but USD CAD is definitely resemblance of the dollar for sure. So those two pairs, UCAD, USD franc, are definitely going to follow the dollar. So if you can have a prediction on the dollar, and you can analyze that, I would say go ahead and put those applications into the UCAD and UFranc. Last but not least, we have the Australian dollar, the Aussie. Now this is again weekly chart, going down multi-year trend line dating all the way back to 2013. Broken out. It looks like it has broken out just recently back in June, and now we're starting to finally see some strength in the Australian dollar. Now the thing is if you go to Forex Factory, which is one thing I probably should have started with, Australia does have their GDP coming up Their month-to-month GDP coming up. I want to say it's on Thursday. Let's go ahead and head on to Forex Factory and take a look at that. Here we are, September 5th. This is going to be the end of the week with the this is going to be the heaviest of everything is going to be on the 5th, where we have non-farm payroll. We have the unemployment rate, employment change, those things from Canadian for the US dollar, the average hourly earnings, also our unemployment rate. So UCAD could be an interesting pair to be trading on Friday. If I want to say it's the day before that we have, nope, just retail sales, my bad. Unemployment claims coming in on Thursday from the USD. I'm not really for sure what this non-manufacturing PMI is, but it looks like it's important because it has a red folder. Canadian has the trade balance. See if there's anything else. I would expect this Euro retail sales to actually be somewhat quite indicative of how their economy is going to go. Even though it's a month-to-month indicator, it could tell you, how consumers are at, if they're spending or not. It would actually be a good one to watch. So I would watch that on the 3rd, on Thursday, to see how that's going to play out for the Euro. Wednesday, crude oil inventories, of course. And here we have ADP. This is the non-farm employment change on Wednesday. So we have those two things. What was it on Friday? That was non-farm. So there's non-farm employment change on Friday. On Wednesday is the ADP and non-farm employment change. I'm guessing that's just from the company ADP. That gives out, paychecks. If you ever worked for any kind of company, you probably got an ADP paycheck before. And I don't think that's pretty much it. I think these factory orders are also going to be kind of indicative, because we kind of could see how factory workers are playing out. What's being manufactured in the U.S., things like that. So I would keep an eye on that one. I think that might be a good indicator of if the dollar is going to strengthen or not on the 2nd. And then going back first, let's see what we got going on here on Tuesday. Not really much. Again, some more manufacturing PMI. Doesn't look like they're looking for much of a change, so I don't think that's... Oh, here it is. There it is. It's Tuesday, actually, to where it's the Australian GDP. So, quarter over quarter. So, it could be a very good indicator if the GDP for Australia is going to be lagging or it is going to increase. So, going back to the Australian versus the US dollar. Take a look at the 4-hour here and let's see what's been going on with it. Again, cross that multi-year trend line. It didn't even really give it much of a struggle. It didn't really act like it was even there, which is sometimes why I don't like playing with trend lines. I more or less so like playing with levels. And it looks like this right here. Again, I have was your last looks like support level that turned or last resistance level that turned support, and it looks like now it was going sideways there for a little bit, but we do have, it looks like we turned the corner. We do have the 250 MA underneath. Looks like we've got a little bit of overreach, we got a little bit of oversell, and this is currently, while the market is open, it is 7 p.m. Central on a Sunday. I would expect a little bit of a pullback, maybe not much. Who knows? It could test this, right? It could test that area right there. Let's even dig a little bit closer into this, and maybe we can throw a Fibonacci on it and see what we think might happen with the Australian dollar versus the US dollar right now. That is if it actually decides to stop moving upwards. but I don't think it is. It doesn't look like it's gonna, it looks like it's continuing to grow. So this may not be a great indicator. If anything, we could see it grow. And what I like to do sometimes is do what I call a future fib, to where you're gonna kind of predict where, like this resistance line here. That resistance line could be the point or the 618, right? So if we expect that to happen, there we lay it out to here. That could be your 618. So now you've actually got a forecasted new high of 0.75043. And that could possibly happen. You never know. Or that could be the 50 mark, right? So if that is going to be the 50 mark, then we have just a high of a little bit more than that. It could push up to the 0.74162 before we see some kind of retracement. But with it being oversold as much as it is right now, I think we're probably going to see a little bit of a downturn. But right now, it wouldn't come back to a fib level. I mean, we kind of are at a close. I mean, it could come back to the 382. But we'll see. Let me see if there's any levels prior over here to the left that we can kind of get a grasp on. And kind of all over the place. I think this one right here would probably be your next area that you would be looking for. And then looks like you kind of have a little bit of area up here, but from here to here will probably give us some trouble. So let's move on back over and see where we're at. So if this is the new high, or that could be the retracement back to the 50. If we do see this as the new high, maybe it goes a little bit above it. It's what it does sometimes. It likes to test the new high and give a little bit above it, retraces back to the 50. In that case, we are looking at a new high of 0.74137. We can continue to see the Australian dollar to break out into more bullish movements. Again, I'm not expecting the dollar to do anything spectacular, to be honest. We could see more sideways movements, but who knows? These could all be false moves, and I could be wrong. We could be seeing it going the other way. If we do see it go the other way, I would expect it to get below, Australian dollar, get below the 72756 area. But on a 4-hour chart, if it breaks below that on a 4-hour chart, I think we're definitely going to see some more bearish movements. And especially once it gets below that, you're going to see the 50 and the 200 MA come in close to there at the time it does hit that area. And we'll have to see if it's going to close below those and then do a reversal and go back down. But as for now, I think probably going to see a little bit more bullish movements, retracement, and then we'll see where it goes from there. But those are the areas that I have drawn out for all of the USD pairs. I know this was a little bit of a long video, but I hope you guys got something out of it. Sorry for taking so long, but it had to be done. If I wasn't going to do it, who was going to do it, right? So, considering I did do it, like me and go ahead and subscribe, and I'll give you more shortened versions hopefully next time. I just wanted to get through a lot of USD pairs and what I thought about them. And if you guys have any questions, concerns, comments, let me know. I'll leave that information for you, and you guys have a good trading day. It is now 7 o'clock again at Central Time. Trading has begun, and let's all have a good week. All right, guys. So thank you very much for watching, and I'll see you in the next video if I make one. Do you want me to make one?